Hello and welcome to our episode of Monday Markets. As always, you're brought to you by Woo. Link available in the description below. Let's keep this reasonably short and sweet. Famous last words. So monthly time frame, won't spend any time there because it hasn't moved. The weekly time frame has progressed and it's done so in an interesting fashion. I think if you look at this 3-week leg up in isolation, the one that made a higher high of some sort, at least on a closing basis, it actually provides an interesting level in itself for short to medium term trading, which is to say, I think given the size of the move that followed this high, it can be rationally used as a level in itself, which is to say 64.2 as a resistance. And the reason for that, from a weekly structure perspective, is also that this is the highest close. We had a close above, close below type of structure, and now it's proving to be significant on the underside. So currently the market's testing the underside of this resistance level at 64.2. In terms of where is weekly support, I think that's an interesting question. It depends on whether the market offers a deeper pullback or not. Typically what you can do if the market tries to break out or offers a potential break in market structure is just to map out the leg that did so. So I like to use the closers. Other people like to use the wicks. It doesn't really matter too much, I don't think, as long as you're consistent. But if we use the closers and go from lowest close to highest close, typically, and this takes all different names in price action trading, but if you look at eyeballs 60 to 70% of the pullback, that might give you a reasonable area as to where a higher low might form if the market offers a meteor pullback. And so that lands just under 59k, and there's some sort of weekly structure there as well. So realistically, this is what the weekly chart looks like. There's the underside retest of 64.2k, and the other side of the range is 58.1 to 58.7k, right? So I think if you wanted like a very slow moving, zoomed out perspective of the market, I think these two levels would essentially suit you quite well. The daily time frame, I think, encapsulates all of that and just shows it in a more accessible fashion. This is again one of those instances where you have a higher time frame grounding for a level, but given that the slightly lower time frames still overlap with it basically one-to-one, you can rationally justify using lower time frames to interpret those higher time frame signals or front run them or do whatever else. So in simple terms, if the weekly levels are levels on the daily time frame, instead of waiting a whole week to get a signal, you can wait 1 day instead. And obviously the risk is higher and you could get faked out, whatever, but you're paying for speed at the cost of certainty when you're kind of jumping down timeframes. So if we look at this daily, where does that leave us with this current picture? Well, realistically, again, in the simplest possible terms, 64.2k is currently resistance. If you're looking to position for strength on this time frame, it would have to be above resistance or at support, right? That's a very simple framework. I think if you're just starting out and trying to build something, a way of thinking, if you want to position for strength, you want it at support or above resistance. So if we apply that test, what levels meet those requirements? The above resistance one, I think, would be above 64.2. And at that point, you're looking for an invalidation somewhat close to that level because you don't want it to be a double fake out type of thing, which are rare but possible. And then the at support image is quite interesting. I think the deeper pullback one is at 58k if the market gets there, because there's weekly confluence there, sort of measured move pullback confluence there as well. And then the slightly spicier one, I think, is the level we had from last week at 61.7-ish. The reason I don't love 61.7 contextually that much is because it sort of got tested already. So we had an underside retest that failed and it got flipped on the way up, etc. So it makes its way back there again. It would be one of those levels that might be interesting for a short-term trade or reaction, like if there's a really, really fast move into it. But on a daily closing basis, that's not one that I'd be blindly interested in doing business at. It would have to be a wait-and-see situation. Now, thankfully, or somewhat conveniently, I should say, this kind of gives us a range on the daily time frame, which is to say 64.2 range high, 58 comprises the range low, and then you have this questionable daily level, but still daily level falling around the midpoint, right? So if we kind of eyeball what that might look like, I think you're left with reasonably clear areas to do business. If we do this, use my trading view magic, yeah, and you can see this essentially lines up with the daily time frame as well. So this is my map essentially for short to medium term trading for this week on BTC, and we can see that these levels are anchored on the higher time frames as well, and are actionable on the lower time frames because the levels have quite nice overlap. So realistically, in terms of where we are right now, I would say it's an underside retest of resistance. If it manages to pull back, I think the first trouble area for that is 61.4, deeper pullback is 58. If you're not interested in the short-term gyrations, then you have to look at the extremities of the range. What are the extremities of the range? Well, for strength, at least 64k plus or do or die 58. Even the 4-hour essentially tells the same story, that same range high type of thing. And this is a good opportunity to talk about the double failed breakout logic, which is to say that both the weekly, the daily, the 4-hour, whatever time frame you're using, there's a lot of price action focused around this high here, right? And the failed breakout that took place. Now that we already had one failed breakout take place at this level, a second failed breakout, in my view, is generally less likely. So if you have a level, the market has a failed breakout and actually leads to something, but then eventually starts getting accepted back above where a fake out has already taken place, that second attempt and that acceptance the second time around post fake out is much more likely to be a real breakout than it is to be a second failed breakout. So that's a level that I think is quite good, simply because it's sort of proven itself to be relevant, and you've already had one setup, one that we discussed last week, take place in its midst. So if it manages to find acceptance back above whatever that is, 64.54, I think trying to find momentum continuation longs with a reasonable, and the validation that's reasonably close to the level, that's the earliest looks good for continuation level that makes sense to me. So realistically, it's either strength through the high now that we've faked it out, or pull back deeper and beg for higher low type of thing. That's really it for BTC. I don't think I'm missing much. And again, this is a case where all the time frames essentially agree, right? So if we take that argument on the weekly, that makes sense because it's the highest close currently being retested. So if it plows through, great, that's strength. If it pulls back, great, there are levels to do business, right? Eyeballing it on the weekly. If we then go down to the daily, essentially the same conclusion, right? Except we have the luxury of a range midpoint there as well. If you're interested in slightly more short-term trading, which is to say, same arguments, through 61, the whole double fake out thing applies on the daily as much as it does on the weekly, as much as it does on the 4-hour. Happy days, 64 plus, worth a punt. Pullbacks, 61.54, first trouble area. Deeper pullback is 58. And then even on the 4-hour, same thing, right? Same range high, same failed breakout structure, same midpoint, and essentially same range low / pullback level. That's what we're dealt with. What that means for right now is a reaction off of resistance, right? So contextually speaking, my system wouldn't let me log into this. The earliest I'd be able to long this is, I mean, if I'm being really aggressive, 4-hour close through 64.3, 64.4. And even then, I'm just praying I don't get wicked out into this cluster, given it's a higher time frame level. That's really the earliest, either 4-hour or daily 64.4. If I don't get that, then I'm happy to wait, as all of you are painfully aware. The weekly open for this week isn't super relevant for the time being. I mean, it's already played out. There's a lot of Monday oscillation around it. So if we look at this, we initially spent very little time around the weekly open here, shot off, and I mean, a lot of the time these moves play out in this type of fashion, which is to say you get a weekly open without a clear drive either way, and so when you do get an impulse, a lot of the time it makes its way, especially on a Monday, just to open the week, a lot of the time it makes its way back to there, right? It works both ways. Obviously, all sorts of nuance and context applies here. Is there a pre-existing directional bias? What kind of breakaway gap is it? So on and so forth. But yes, the weekly open magnet on a Monday is not the dumbest thing in the world. And that's essentially what we've had. We know there's high time frame resistance in this area, and the weekly open's been sort of holding us up on the support side. But yeah, in terms of actionable right now, what do you think? I think it's a retest of resistance for the time being. Not around enough to short this type of stuff, and really don't think it's worth it. I'd rather take the higher strength signals, if you will, which happen at the extremities. On the ETH side, I haven't even looked at this chart, to be completely honest with you. Yeah, I don't know. I think, what was the level we discussed on Casual Friday that Don was shilling me? So Don was shilling me 2.5, so naturally that broke and I lost all of my money. I got liquidated, so I have to go through the classic claims refund process for him there. But yeah, on the ETH front, guys, I don't know. I don't like this chart. We could do the whole LARPy thing of just start drawing out, like, you know, one extremity to the other, and then we can find a midpoint that we can go down on lower time frames. We can do that if you're desperate for technical levels, but the question would be why. One answer would be that, well, ETH BTC is really strong, so I want long ETH instead of BTC, but that doesn't seem to be true. So if you're going to express strength, then I think it makes more sense to do so via BTC or some of the altcoins that have been doing well. And again, I think this is just another symptom of what ETH has been doing cyclically, which is to say that if you want to be long stuff, ETH hasn't been a good bet for it. If you want to be short stuff, there are better bets for it that are have similar liquidity profiles and just trade better, move better. So it's kind of the unloved middle child, if you will. And this is a kind of follow-up to the last episode of Monday Markets. Sorry, I should be a good YouTuber and say that given we had this level on the chart last week, I made $10 trillion selling this one, and we also had this level on the chart last week. So I obviously made this bottom and sold it into this top, and I'm actually up $50 trillion. So thanks for playing, use my ref link. But yeah, this is the chart. I don't think it needs any updating for the time being. I'm generally happy with these levels. I can obviously add, I mean, let's add the weekly cluster, just in case we have a bit of a shitty time. Let's do this and call it just weekly. Here we go. So that if things really start to go to shit, I'm not panicking straight away and I know there's some sort of structure rather than nothing. So for me, and is this an updated weekly open? Yes, it is. So this is the map. Last week we had a map. It ended up being a helpful map because we had this entire failed breakout, reclaim, resistance, whatever leg. For this week, this is what it looks like. So I know some of you just like the levels and trade them better than I do, which isn't hard to do. But that's essentially what I'd find interesting. Altcoins. The general positioning in altcoins seems to be to essentially look for the strong things to stay strong. There isn't a lot of rotation. It's basically memes and some weird high caps. I think given where BTC is, you essentially, and also how a lot of these altcoins have been trending, it's worth having quite aggressive trend following criteria for these, which is to say that you always trail up based on the next level of support, right? And then as soon as one breaks, you don't just hold. It's worth getting out. And then look, if it turns into a failed breakdown, that's fine. You just kind of get back in at a slight premium, but you end up avoiding the situations where, you know, you're riding the trend breaks, you're like, it's just a slightly bigger pullback, and then it does that. And this entire portion is unnecessary, right? So I think that's a reasonable sort of tactical approach with many of these. So if we sort of go through the watch list very, very quickly, I think breakout levels should be holding. Like if we look at Aptos at $8.50, that should be holding only because the previous breakout levels at 7.4 held as well. So it's more of an updated invalidation type of model if you're trend following these things. And just look at the nearest daily / 4-hour support. And if that doesn't hold, I personally wouldn't be giving it more of a chance than that. AVAX, not super interesting. Neither is FTM. Sorry, neither is Dogecoin. On the FTM side, I think the weekly chart for this is quite good, no? If you're going to get really wide with it, weekly at 56 cents, always been a nice level. I think that's pretty good. More locally, we seem to have put in some sort of failed breakdown attempt through the range low at 63 cents. So again, it's the thing of updated and validation, which is to say that previously, maybe this was your pivot. Like, okay, we've broken out of 50 cents. I'm going to move up my invalidation. But now I think following this spike down, you've got a new one. And that way, if you're wrong, you only round trip this much versus round tripping this much. And then if you extrapolate that to being positioned in several altcoins, you can actually save yourself a lot of money and still make money if you're wrong, essentially. Not in the influencer way, but if your entry is good enough, you're not giving the whole thing back, even if you were wrong about the entire trend being a thing. Link, not super interesting. Ever since this kind of big underside retest, it made its way back down, not very high on my watch list. Near. I don't like this chart. Yeah, sorry. Pepe, we spoke about I mean, all the DonAlt shills, to be fair, frustratingly, all the DonAlt shills from Casual Friday aged really well. I mean, the Pepe support bounce, same thing here. I would then drill it down on the slightly lower time frames and have an updated kind of level that should be held if the market is strong. This one's a bit tricky because of a lot of these V-shaped moves, but at least on the higher time frame, 880, 890, basically this weekly structure should hold. The problem is, again, because we wicked so low, and this is how altcoins work, you're not going to get a super tight invalidation on it. So yeah, not so clear on that one. Popcat, I think, is one of the more straightforward ones, simply because it's like an all-time high breakout type of thing. So sometimes that necessitates having wider stops, simply because the EV of it being a real all-time high breakout is pretty high versus trying to trade manage the admittedly high 10-20% type of volatility. So if you want to get really conservative with it, it'd probably be around the breakout level. Anything back below there sucks. On the lower time frames, I mean, this is your first sign of weakness, break in the 1 hour range. So I mean, if you're flat looking at this saying it's above all-time high, I want a piece of it, you either want a failed breakdown, 136, 138, whatever, or for this thing to kind of do a rug pulley move into some sort of 4-hour structure, any of these little base consolidations, and that's realistically going to be your best bet. Say, I think it just gets carried up because people confuse it with Sui, but we'll go there for a moment. In a moment, Sheeb, did Don show me this one? Probably. I don't remember exactly what the level was. It could have been this, but maybe I'm just hindsight curve fitting here. Don't love this structure particularly. Sui, has this thing made an all-time high? Almost. It's bloody close. Interesting. Yeah, again, in this instance, when you're dealing with these types of trends, in the previous consolidations and previous breakout levels should not be violated, right? Like previous breakout wasn't violated, breakout wasn't violated, breakout wasn't violated, even this mini breakout wasn't violated. I think that's the best way to play these things if you're trend following. Just got to be really aggressive with updating your invalidations. And if you're flat looking for an entry type of thing, it kind of has to be done on the low time frame. There's no point looking at this being like, oh, you know, this daily level is really sick at 115, because if it gets back there, at that point it's corrected 40%, and it could be a good trade in itself, but it's certainly not a trend continuation, trend following trade. Most of the time with trending stuff, you want to play it close to the market, the nearest daily / 4-hour support, and then the second that breaks, you just step away and give it a chance to do what it has to do, right? Again, I'm not giving these any I should be giving these a more detailed look, but maybe I do that on Thursday as I lie about every single week instead of trying to cram it all into a Monday episode. Tau. Yeah, same thing realistically, right? Like, it's been a story of breakouts holding, and you recently had a failed breakdown of sorts. So from a wider invalidation perspective, you know, given a failed breakdown, it shouldn't make its way back there. If you're playing it closer to the market, then you can even see that the failed breakdown level has turned into a range low in itself. You've got the other side of that, and there you go. There's your nice little convenient roadmap. But again, the whole point I'm trying to convey here is not the exact technical levels for these exact charts, but more general, what I think is a pretty conservative but reasonable trend following framework for these things, which is to say that you're always updating your validation. You know, again, look at this stuff. Breakout, not violated, not violated, not violated, not violated. And as soon as you see a shift in behavior, a shift in that type of character, that's usually your first red flag to at least rebalance, if not get the fuck out completely. So that's really the useful thing here, as opposed to how I'm looking at these charts. The charts are whatever. Same with Tron, right? Weekly breakout level. Daily, don't like that daily chart. Sorry. With just been strong and also had its pullback level. That's another thing, right? So once you've had the pullback on a lot of these, if the trend is strong, it should have no reason to revisit the sort of big retest level. So, you know, here you had a big breakout, came back and did the big retest level. If the market's strong, you should have no business going back there. So it goes back to what was said earlier, where this can be your starting invalidation, and then you go down to the lower time frames to see if you can drill down something a bit more specific. But there should be a kind of prevailing trend here that you're starting to notice for some of these, which is that if they're trending correctly, you shouldn't be getting big retests, shouldn't be getting big pullbacks, shouldn't be getting failed breakouts. But in the moment you do, that means that something's gone wrong, or there's some signal there. Now, in terms of what that signal is, which is to say that if, I mean, we can write this out, right? If high time frame trend following and some shit changes, following applies, 1, GTFO completely, low time frame trend broken, shift in behavior, or 2, low time frame trend broken, but medium time frame / higher time frame trend may be intact and offering a pullback. Get the fuck out of shallow levels and prep to rebid deeper levels. That's essentially how my brain works with this kind of stuff anyway, whatever's left of my brain. So, you know, if as we were following those charts, you can see there's perfect breakout, no retest, perfect breakout, perfect retest, just no nonsense, basically. As soon as you get nonsense, I think it can mean one of two things, and they're not mutually exclusive either. You can either just, like, be done with it. Certainly if you're on the aggressive rotation trading side, it's like, okay, I wrote this and now it doesn't look like how it used to look. I'm not going to give back all my gains. Goodbye, I'll see you later. The slightly more, I mean, the sort of side of it that requires more management is the second one, which is to say that, you know, if you're following, you know, if the high time frame trend looks like this and the low time frame trend looks like this, and then it breaks, right? You get a low time frame trend break. The trend is broken on the lower time frame, but the higher time frame might still look just like this, right? So then you're faced with, okay, on this time frame, maybe you don't want to step in front of the first level of support on the 15-minute, hourly, or whatever fast-moving moving average you're using. But on the higher time frame, maybe it's the beginning of this type of move that then gives you this. So you can be low time frame bearish, that, okay, something's broken, I'm going to step away. But you could be high time frame bullish to say that the low time frame trend is what's going to give me the high time frame pullback, right? The low time frame bearishness is what's going to give me the high time frame pullback, right? That's what I'm trying to convey here. So it's not like necessarily end of the world if you get a low time frame trend break on Multicoin if the higher time frame trend, market structure, whatever is good enough. Because it could just mean, it's basically trying to answer the question, how big of a pullback am I going to get? If the low time frame trend is strong, then the answer is not very big. If the low time frame trend breaks, then the answer changes and says, okay, maybe now I'll get a big pullback. And will allow me to position using higher time frames. Anyway, I'm going to shut up. I don't know, this part is probably complete nonsense, but I'm going to keep it up nonetheless. I've re-recorded this video twice already, so sorry I don't have any more in me. Hope you all have a wonderful Monday. Thank you to Woo for supporting the show. Read my tweet about social trading. Have a wonderful start to your week, and I'll speak to you later. Bye-bye.